A warning didn't arrive as a headline. It came as a distortion deep inside the data. A place where only the most patient analysts still look. A strange frequency, repeating, tightening, accelerating, as if the dollar itself were sending a coded message. For decades, the U.S. dollar has survived every shock. Recessions, wars, oil crises, political fractures, global instability. But in late 2025, something shifted. Not on the surface, but underneath. The numbers began forming a shape. A pattern economists hoped they would never see again. A spiral. A cycle consistent with every major currency collapse of the last 200 years. And now it was aligning perfectly with the U.S. dollar. This wasn't phase 1. Not phase 2. Not even phase 3. Analysts quietly agree. We have entered phase 6, the terminal stage. The world hasn't noticed yet. Markets are calm. The news cycle is distracted. Investors believe the Federal Reserve has everything under control. But behind the curtain, liquidity is evaporating. Global creditors are repositioning. Commodity signals are flashing red. And gold, the ancient enemy of the dollar, is beginning to rise with a frightening tempo. This is not random. It is not noise. It is the blueprint of every empire that forgot the weight of its own currency. The last time this pattern appeared, entire nations fell into darkness. But now the timeline is moving faster, much faster than economists predicted, because this time the United States is not alone. Every major central bank is printing, tightening, reversing, panicking, all at once. Every nation is fighting the same invisible enemy, a global debt system reaching critical mass. And while the dollar still stands at the center of world power, its foundation is beginning to fracture, quietly, silently, fatally. Tonight, we follow the spiral. We trace the pattern hidden beneath decades of data. We uncover how a currency built on confidence is now collapsing under its own mythology. This is not fear. This is not speculation. This is the mathematics of collapse and the prophecy of every empire that ignored the signal. The warning has begun. Phase 6 is already here. Every collapse begins as a whisper. Not a shock, not a crash, but a pattern so old it feels almost mythological. Historians call it the currency death spiral. Economists call it the terminal phase. Empires call it nothing at all because they realize it too late. To understand the dollar's phase 6 spiral in 2026, we must return to the beginning, to the moments when the world saw this pattern before. 1. The Roman denarius, the first great warning. The Roman Empire didn't collapse from invading armies alone. It collapsed when the silver inside its currency was quietly diluted, coin by coin, generation by generation, until confidence evaporated. When the final barbarian crossed the gate, the collapse was already decades old. Rome fell because its currency fell first. 2. The French assignat, the warning written in paper smoke. Revolutionary France promised prosperity by printing paper money backed by land. A brilliant idea until printing became addiction. Prices exploded. Wages collapsed. Bread cost more than a day's work. The people didn't revolt over ideology. They revolted because their money stopped working. 3. Weimar Germany? The nightmare that rewrote economics. Germany printed its way into oblivion. Currency became lighter than ash. Children played with million-mark bills. Savings evaporated overnight. And a political darkness emerged, stronger than inflation itself. 4. Argentina, Zimbabwe, Venezuela, The pattern repeats. Different nations, different leaders, different histories, but the same spiral: debt, printing, inflation, panic, collapse. The timing changes. The geography changes, but the pattern, it never does. 5. The illusion of the dollar's invincibility. For 80 years, the U.S. dollar has lived above this pattern, protected by military dominance, global energy control, international trade dependence, geopolitical alliances, unmatched financial infrastructure. But a truth is resurfacing. No currency, not even the dollar, escapes mathematics. The shocking discovery: when researchers overlaid the timelines of past collapses onto the modern U.S. dollar cycle, they found something terrifying. The dollar has passed every historical checkpoint of collapse and is entering the final stage faster than any empire before it. The warning signs rhyme with history: uncontrolled debt growth, rapid interest fluctuations, geopolitical fragmentation, supply chain instability, global distrust of fiat money, gold quietly accumulating in the East, digital currencies emerging as alternatives. It's not chaos. It's not coincidence. It's a script the world has seen before, and the U.S. is now performing the last act. What's worse, this time the collapse is global, synchronized, accelerated by digital markets, and multiplied by debt levels the world has never witnessed. The spiral is tightening. The pattern is no longer hidden, and as Phase 6 accelerates toward 2026, the question isn't whether the dollar faces a reckoning, but how fast the final cycles will unfold. There was no single catastrophe, no explosion, no market crash, no headlines screaming this is the moment everything breaks. Instead, the collapse began with a small, almost invisible tremor. Something changed inside the financial system in 2024 to 2025. A shift so subtle that only the most obsessive analysts noticed. A strange vibration in the liquidity data, a distortion in the banking flows, a crack appearing beneath the strongest currency in the world. The moment the system began to break was psychological. A change in faith, a weakening of belief. Because all money, including the dollar, is a story we agree to trust. And in 2025, that trust began to flicker. 1. Interest rates became the first signal. The Federal Reserve raised and cut rates at a pace never seen in modern history, not because they wanted to, but because they had run out of options. Rates too high, the system cracks. Rates too low, inflation explodes. The Fed was no longer steering the economy. It was reacting to forces it could barely contain. 2. Banks began to quietly struggle. It started with regional banks. They didn't fail, not yet, but their liquidity ratios began whispering warnings. Deposit flight increased. Borrowing surged. Credit conditions tightened. Corporate debt refinancing turned toxic. Behind closed doors, bankers admitted the system is stable, but only as long as nothing unexpected happens. 3. The global trade engine slowed. Shipping containers sat idle. Trade routes thinned. Nations began hoarding resources. Energy markets fractured into East and West. The global economy, once synchronized, now beat in disjointed rhythms. What happens when a world built on trade begins to move backward? Currencies lose their meaning. 4. Gold started moving quickly. Not retail gold, not jewelry gold. Central bank gold. In the shadows, nation after nation began to accumulate reserves at a speed unseen since World War II. China, Russia, Turkey, India, Saudi Arabia, even European nations quietly joined the silent rush. This wasn't diversification. It was preparation. Gold rises not when people seek profit, but when people fear their currency is dying. 5. The dollar's internal fracture appeared. The final sign was unexpected. Liquidity evaporated at the core of the system. The repo market trembled. Treasury auctions weakened. Foreign buyers hesitated. Domestic institutions demanded higher yields just to show up. For the first time in generations, the world questioned whether the U.S. could sustain its own debt machine. A machine built on infinite expansion, now colliding with mathematical limits. The moment of recognition, economists said it quietly. This is the beginning. Traders felt it in their bones. Something is wrong. Central banks prepared silently. We cannot stop what is coming. Because once the core begins to crack, the system doesn't collapse all at once. It accelerates, contracts, tightens, spins, just like every empire before it. Phase 6 had begun, but the world was only seeing the first ripple, not the wave that followed. Every currency collapse begins domestically, but the fatal blow always arrives from outside. And for the first time in 80 years, the U.S. dollar, the beating heart of global finance, began to lose the one thing that held its empire together: global obedience. 1. The petrodollar begins to fracture. For decades, the dollar ruled the world because oil obeyed it. Every barrel, every shipment, every contract. But in 2025, beneath the world's attention, something unthinkable happened. Saudi Arabia, the architect of the petrodollar, announced new deals not priced in USD. Quietly, softly, but unmistakably, energy divorced itself from the dollar, and the world felt the fracture. Without oil, the dollar is not a king. It is a currency like any other. 2. BRICS and the new gold-backed revolution. BRICS didn't want to destroy the dollar. They wanted to escape it. Russia pushed. China prepared. India hesitated, then joined. Brazil and South Africa followed. And in private meetings, something historic emerged. A shared settlement currency backed partially by gold. Not a full gold standard, not a return to 19th century policy, but a hybrid system designed for one purpose: bypass the dollar, reduce dollar reserves, weaken U.S. financial control. One diplomat whispered, "We do not need to kill the dollar. We only need alternatives." 3. U.S. Treasuries lose their final defense. For decades, foreign nations bought U.S. treasuries blindly. It was automatic, predictable, safe. But suddenly, they stopped. Not all at once, not dramatically, but slowly, the same way trust fades in a relationship. Foreign holdings began to shrink. Auctions demanded higher yields. Long-term bonds became toxic. The dollar's risk-free mythology cracked. Because a currency is not powerful when people use it. It is powerful when people trust it, and trust was evaporating. 4. Digital currencies enter the arena. While the dollar was stumbling, another force rose from the shadows. CBDCs, digital state-controlled currencies. China's digital yuan spread through Asia like wildfire. Russia tested its digital ruble for energy settlements. Europe rushed to accelerate the digital euro project. Even Africa began building unified digital blocks. The world was moving forward, while the dollar's architecture remained stuck in the 1970s. Digital money doesn't wait for permission. It replaces systems quietly. 5. The moment the world realized the dollar could fall, the turning point came during a G20 emergency finance summit. Each nation arrived with polite faces, but privately, they carried fear. Not fear of recession, not fear of geopolitical tension, fear that the U.S. currency, the anchor of global stability, was drifting toward the edge of mathematical collapse. One European minister said privately, "The world is preparing for a future where the dollar is no longer the default setting." Another added, "Empires fall when their money loses gravity. The world didn't wait for the dollar to collapse. They prepared for its decline, and that preparation accelerated the fall. Because the fate of a reserve currency is not determined by strength, but by the moment others stop believing in its eternity." And by 2026, belief was fading at a speed that stunned even its defenders. The power shift had begun. For the first time in modern history, the global financial map was no longer centered on Washington. It was dividing into blocks, splitting into rivals, rerouting centuries of economic power. The dollar was not dead, but it was bleeding, and the world had already smelled the blood. The dollar's fall didn't happen in a straight line. It spiraled. Every major currency collapsed. Rome, France, Weimar Germany, Argentina, Venezuela, follows the same six-phase pattern. 1. Expansion. 2. Imbalance. 3. Desperation. 4. Overreaction. 5. Fracture. 6. Terminal spiral. The U.S. dollar entered phase 6 sometime between late 2025 and early 2026. No one announced it. No official admitted it. But the data exposed everything. The world's most powerful currency had crossed the point of no return. 1. Inflation returns, but different this time. The Fed believed inflation was defeated. It wasn't. It was hiding. Debt-driven liquidity, global supply shock, and weakening trust converged into a second inflation wave, one more violent and faster than the first. Prices rose in strange, unpredictable spikes. Food, energy, insurance, housing, everyday essentials. But the most terrifying part wasn't rising prices. It was shrinking purchasing power. People worked more but owned less. They earned more but lived worse. Inflation wasn't an economic event anymore. It was a psychological wound. 2. Interest rates started crushing the system. To fight inflation, the Fed raised interest rates again. This time, the system couldn't take it. Higher rates began suffocating small banks, mortgage markets, corporate refinancing, government debt costs, treasury auctions, consumer credit, global dollar-denominated loans. The Fed wasn't tightening to control inflation. It was tightening to delay collapse. But every rate hike snapped another thread inside the dollar's architecture. And soon there were too few threads left. 3. Liquidity drained from the core. Liquidity is the oxygen of the financial world. Without it, the economy suffocates. In Phase 6, repo market shook. Interbank lending slowed. Foreign liquidity dried up. Demand for treasuries weakened. Swap lines strained. The frightening part wasn't the drain itself, but how quickly it accelerated. Liquidity doesn't fall gently. It vanishes like a light switch turning off. And once liquidity disappears, panic begins. 4. Trust collapsed faster than the data showed. Every currency collapse has one fatal moment when people stop believing the system can fix itself. It happened quietly. Families pulled cash. Corporations accelerated gold purchases. Banks increased internal reserves. Foreign governments diversified out of treasuries. Investors demanded higher yields for shorter maturities. Everyone acted like the dollar was still strong, but prepared as if it wasn't. Confidence fractured first in whispers, then in actions. And trust, once broken, never returns to its original form. 5. The feedback loop of doom. Here is the terrifying truth of Phase 6. The collapse becomes self-accelerating. Falling trust, rising yields. Rising yields, higher debt costs. Higher debt costs, bigger deficits. Bigger deficits, more printing. More printing, more inflation. More inflation, more distrust. More distrust, less global demand. Less global demand, weaker dollar. Weaker dollar, higher import prices. Higher prices, more inflation. A loop with no exit. Mathematically irreversible. Historically consistent. Structurally fatal. 6. Global systems began to react. International markets didn't wait. They saw the pattern unfold because they had lived it before. Asia reduced exposure. BRICS increased gold settlement. Europe quietly protected its reserves. The collapse didn't happen in a day, but the moment it arrived, the world felt it instantly. It began with silence. A silence so unnatural, so heavy that even the markets seemed afraid to breathe. The dollar, the currency that shaped wars, empires, dreams, and entire civilizations, finally reached the point where mathematics defeated a mythology. Phase 6 was no longer a forecast. It was unfolding in real time. 1. A day the system stopped. Screens froze. Bond markets halted. Liquidity vanished. Banks shut their doors temporarily. ATMs displayed the same red message: insufficient funds. The global financial system, the most complex machine humans ever built, had seized like an engine without oil. Investors panicked. Corporations paused. Governments scrambled. Ordinary people felt the fear in their chest before they ever saw the news. It wasn't a recession. It wasn't a crisis. It was a breakdown of the world's operating system. A geopolitical earthquake. Around the world, nations reacted instantly. China activated its gold-backed settlement system. Russia rerouted energy contracts into digital rubles. India launched emergency currency stability protocols. Saudi Arabia switched oil settlements to a diversified basket. Europe scrambled to stabilize the euro's last supports. Africa accelerated regional digital blocks. South America unified commodity-based reserve pools. This wasn't coordination. It was survival. The world wasn't witnessing the collapse of the dollar. It was experiencing the reconfiguration of global power. 3. The Great Reset of Debt. The U.S. government faced the unthinkable. Exploding debt service, failed treasury auctions, collapsing demand, spiraling refinancing costs. To survive, policymakers executed the move economists feared most: a partial reset of federal debt. Not a default, but a restructuring disguised under new monetary policy. Some called it innovation. Some called it necessary. History will call it what it truly was: the final admission that the old system had died. 4. The people felt the collapse before anyone else. Food prices doubled. Fuel became unstable. Savings lost purchasing power overnight. Millions rushed to buy gold and digital assets. Protests erupted across major cities. Fear replaced predictability. Hope became a scarce resource. The global economy didn't collapse because institutions failed. It collapsed because trust failed. And once trust evaporates, even the strongest currency becomes paper. 5. The rise of the new monetary order. But from the ruins emerged something unexpected. Not chaos. Not anarchy. A blueprint across continents. Leaders and economists gathered to rebuild the financial architecture. This time, without a single global master. The new monetary order had 3 pillars. Pillar 1, gold, the eternal anchor. Nations agreed to maintain gold reserves as the stabilizing force behind settlement systems. Pillar 2, sovereign digital currencies, CBDCs, fast, programmable, transparent, eliminating middlemen, and resisting manipulation. Pillar 3. Multipolar trade networks. No single currency would dominate. Power and risk would be distributed. This was not the end of the dollar. It was the end of the era where the dollar ruled alone. 6. The final lesson of the Phase 6 spiral. The world had entered a new reality. Empires fall, currencies rise and die, but people adapt. The dollar's collapse was not a tragedy, it was a transition. A painful cleansing of excess, arrogance, and denial. The old financial world died, so a more balanced one could be born. As the dust settled, one truth became clear. The future will not belong to a single currency, but to those who understand the patterns, read the cycles, and prepare before the spiral begins. Because history's greatest collapses don't destroy civilizations, they reshape them. And now, in the first days of the new monetary order, humanity stands on the edge of a future rewritten not by crisis, but by clarity.